Good afternoon, grinders. Happy Friday to you. You made it. Almost there. Almost to the weekend. I hope you enjoyed that Thursday night football game. I tried to watch it. I fell asleep. It wasn't that it was a bad game. I'm up early, going over stocks and things, and unfortunately, I fell asleep. So let's dive into it. There's one thing I wanted to highlight this afternoon. Draftkings. So I've been invested in Draftkings for the past year and a half, 2 years, and it's been trading around this range, right? I guess we can go to year to date. Up a little bit, up 19% year to date. Let's go past 5 days, down 5%. Past month, it's up just shy of 6%. But today it's down 3.47%. There was a low today of 6%. And you might be wondering what the heck is going on. Yeah, so am I. So I didn't see any reports specific today, but it is on its longest losing streak of 9 straight days, and that's its longest streak since November 19th, 2021. Okay? And today it fell below its 50-day moving average of $44.83. Just some stats for you. Today, I'm already in this contract. I already have, I believe, 3 contracts. I already have 3 contracts, which we're losing, and they expire January of next year. Well, it dipped so low today. As you can see, look at this. It is pretty low, almost to its low for the lifetime of this contract of $1.30. I got it around 220, maybe 5-ish. I think that's what it was. Yeah, 225. So it's below that 225 right now. But I am confident we'll get back up. I was going to roll it out until June or so because I really want to get the results after the Super Bowl and everything's over and see how that quarter concluded, especially during the playoffs. But I think it's fine just to get the quarter that is coming up in November 30th, I think, is when that quarter closes. And then we'll get announcements or earnings shortly after that. But this one has the most open interest and the most volume today, especially with today's drop. I knew people are going to take advantage of it. Now, a lot of people probably bought maybe this morning at $2. I think it's not bad to get it $2.25. You can kind of see for a week how significant of a drop that was. We were kind of a high at $3 about a week ago. A month ago, we were a high of $4. So that's easily we can double our money without the stock really being at its all-time high, which is great. I believe the all-time high was earlier this year, which is right around here in February, probably. Yeah. And so look, $2.25 a contract. If it ran all the way back up here to $11, that would be a nice little return, right? Analysts love it. As you see here, the mean target of $55, $56, all strong buys. Analysts are still bullish. They're still raising their price targets on the company. But I did want to provide some data, so I'm always going to give you some data. So I went to Gemini, as always, when I do my research, and I said, how much money is projected to be bet on sports this year and compared to the past 5 to 10 year average? So Gemini says, based on recent reports and projections, here's an overview of the projected sports betting handle for 2025 and how it compares to the past 5 to 10 year average in the United States. Now, I've went over what betting handle is, and I think there's another term, coin in. I did this a couple months ago when I was really diving into Draftkings and doing some research. I believe handle is how much money they take in, how much they bring in for the bets. Now, in sports betting terms or gaming industry, what is considered the handle? We'll do this live with you guys. See if I'm correct. In sports betting or the gaming industry, the term handle refers to the total amount of money wagered by bettors on a specific game or event. So that's the total money in. Okay. Okay, so projected handle for 2025. By the end of 25, the U.S. legal sports betting industry, let me see if I can blow this up for you guys so you can see a little bit better. Okay. The legal sports bet industry is projected to reach a total of a handle of 164 billion, which is a 9.5% increase from the previous year. Not bad. Revenue expected to reach 16 billion, reflecting a 17% growth rate. For the 2025 NFL season alone, Americans are projected to wager an estimated 30 billion, an 8.5% increase from the previous year. Okay? So let's do a comparison of the past 5-10 years. Since Professional and Amateur Sports Protection Act, the PASPA was struck down in 2018, allowing states to legalize sports betting, the U.S. market has grown significantly. The projected handle, 164 billion, is a substantial increase compared to the 6.6 billion wagered in 2018. Huge difference, right? This growth is fueled by the expansion of legalization and the rise of mobile betting. So again, projected 2025, 164 billion. We see 2028, 6.6. Then the next year, it pretty much doubled to 13 billion. Then it hit 21 billion. Then it doubled from 20 to 2021. Everybody at home, right? From 21.8 to 57.53 billion. So almost 58 billion. Almost doubled in 2022 to 93 billion. 23 went to 121, 24 to 149, basically 150, and then she is projected 164. So look at that revenue, that growth rate. So revenue growth has been outpacing the increase in betting volume, driven by a rising national hold rate, which means sportsbooks are winning a large percentage of bets. Mobile betting continues to be a major factor in market's growth. So in conclusion, the U.S. sports betting market is expected to continue its strong growth in 2025 with a projected handle significantly higher than the average of the past 5-10 years. This growth is supported by increased legalization, the popularity of mobile betting, and a rising national hold rate. Okay, so that's a lot of things going forward for DraftKings that could be beneficial of how the stock performs, its share price hopefully moving higher. Okay, so let's take it to the charts. And I think I mentioned, if not, it fell below its 50-day moving average of $44.83. So it's currently trading at $44.27. And I've been really diving into the charts, trying to understand the charts and get better. So I've incorporated these two lines, and let me blow it up a little bit more so I think you guys can see it a little bit better. So this purple line is the simple day moving average. Basically the past 50 days, this goes 50 days, the average price at the end, the close of the day, or of the shares. So the average share price, the closing average share price over 50 days. Okay. Now this one down here is 200-day moving average. It's the average over 200 days, that closing price in shares of DraftKings. So what we want to see over the long term, I'm going to zoom in out a little bit because the chart's not acting right. Okay. What we want to see is we want that 50-day moving average to stay above the 200-day moving average. Now, you might be able to see here, the 50-day is below the 200-day. When you get that cross, that is termed as a golden cross. And it potentially means that the share price is trending upward from a downward trend. Okay? So we're kind of moving from having a downward trend to moving higher. And we can see there afterward, not immediately, but we got this nice run, okay, into the new high. And then we see here, this is a death cross when the 50-day moving average is moving below the 200-day moving average, and that typically triggers a downtrend, moving from maybe possibly a consolidation and just moving sideways to going down, a downtrend. Okay, and when you get to this area where your share price is moving below the 50-day and heading towards the 200-day, that is a potential time to you start investing, where share prices might be a little bit at a discount, giving you a little bit of value and waiting for it to push higher and start another bull run potentially. So I decided to, and this is probably a little aggressive, because if we look, there's really no trend that's saying this is moving higher right now. It's on a downtrend here. We really haven't seen enough to give us a conclusion that shares are going to move higher. But I know Draftkings has kind of been moving in this range, and whenever it moves out of this range, it typically bounces back up. And especially when the markets are all-time highs, I just think today's move is really overblown. And so I didn't mind jumping in. So we can see the one-day chart's not showing us any type of pickup. Now the 4-hour chart's giving us a little bit of something here. And then let's look at the 1-hour chart. Yeah, it's kind of bouncing off that lows. Now we did see, going back to the one-day chart, we dipped significantly. Like I said, it was down 6% this morning when it opened, and then it shot back up. Now it is good to see it's moving off of that high pretty significantly, but there's nothing to say that this is going to move higher. You probably need a little bit more information to tell you or give you confirmation it's going to move higher. But because of the steady amount of open interest in the contract that I'm in, and because of the amount of volume that's in there, I'm just kind of following the money and I'm jumping in. I'm not to say that Draftkings stock is going to hit $50. It doesn't even have to hit $50 for me to make money, as long as we're closer to that 50 before the end of the expiration. Now, if it's 30 days and we're still hovering at where I am right now, I'm probably going to lose money on that contract. But for right now, I am going to take the leap of faith, and I decided to jump in and buy 2 shares of that contract. And if I can find it for you guys, the contract it's a $50 strike price. It's a call, and the expiration date is January 16th, 2026. I bought 2 earlier before we jumped on at $225 for a total investment of $450. $450 in a speculative play, I'm all right with. If I lose that $450, I'm all right with it. To be honest with you, if I lose this entire amount that I have invested in this contract was just over $1,000, I'm not going to be devastated. To be honest with you, I think the safer play would be to just buy some long DraftKings shares. I might do it in one of my portfolios. I'm probably not going to do it in my bigger long-term portfolios, but I might get some shares here in Robinhood or whatever the case may be. So I just wanted to share that information to you, give you a little bit of game on DraftKings. Use the information as you wish, but it's one contract that I'm confident in. I'm not putting a lot of time on it. And it's because when I looked out further, there wasn't a whole lot of interest in the further durations or longer time in the contracts. So I said, let me just jump in this one. It's not going to cost me an arm and a leg to get in. It'll bring down my average costs than where I'm currently at. And so I'm all right with it. We're gonna remain patient and see how it goes. I did find a couple other ones, but you're gonna have to be in the Patreon $10 a month to take advantage of those. And those plays I have a lot more conviction in. Now, I did not jump in any contracts with those because those are the big boys. And those contracts are going to be very expensive. But if you want to see where we're getting in a company like Amazon, jump in the Patreon and give you the targets that we're looking for, and we're going to be investing aggressively. So enjoy the rest of your day. Happy Friday.